Hello everyone and welcome back to another episode. I want to show you the move that I just did. Go ahead and take a look at my Fidelity account here. This is my month by month and day by day transactions for the month of November, and this is closed positions that I closed out. On November 2nd, I had a net profit of $268.85. I closed another position, a big one out. That was my iRobot position for $1,456. I had another small trade for $236, and then I had another small gain for $34. And then yesterday, I had a net loss for a position that I closed out for negative $455. In this video, I'm gonna go over what that $455 loss was, why I decided to do it, and it was based off of Chewy stock, and I'm gonna explain exactly where my head is at. And so if you're investing in the market right now, not only if you have position in Chewy, or if you just have investments in stocks in general, I'm gonna show you where my head is at and what I'm doing to hedge myself against this high-flying market. If you haven't checked this out already, this is a link to get up to 50 free bucks for getting signed up with M1 Finance right here where my mouse is at. Try out other brokerages like Robinhood and Webull to get up to 4 free stocks with them. My Cash App and PayPal is listed down below, as well as swag bucks and referrals to major credit cards, as well as asking me questions through my email listed right here. If you haven't checked it out already, go ahead and subscribe down below in the channel. My name is Jordan, I'm a millennial investor, and let's go ahead and jump straight into this. This is my trading history right here, what you're seeing on the screen. And this was a trade that I did, and right here, where my mouse is at, this bottom transaction that's highlighted, this is selling a covered call for April at a $95 strike. Now, on selling those covered calls, that means that I have to hold my shares in Chewy until April 14th of 2022, so about 5 more months. And that means if the price is over $95, then I have to sell my shares. And I got paid $778 for that transaction. Now, to do that, that means that I had to close out the calls that I had that were almost in the money, that were due about 4 or 5 weeks from now. Now, that cost $671, but I received $778. So the net profit from this all is almost exactly a $100 bill. So basically, I'm getting paid $100 over the next 5 months, about $20 a month, to hold Chewy shares, but now they're at a much safer strike price. I'm forfeiting some of that covered call income, and I'm gonna show you exactly why I did this. So looking here, let's go to December 17th. This has been a couple days now, so the price has moved around a little bit. But $80, this is the contract that I had, currently trading at $281. And then the one that I sold and resold it for was these contracts right here at 95, and those are trading at 350. So you can see the ones that are 350 are trading a little bit higher than the ones that are trading at 280 right now. So that's how I was able to get a net profit. Now on the books, for now, in the meantime, it shows a net loss because I did claim a loss. And so here's the cool parts about this. If you're investing in something like a Chewy, like what I am, you'll see that over the last couple of weeks, Chewy stock has been through the roof. Let's go ahead and take a look at the last 3 months. You see that it's been dipping lower and lower, and that's when I was buying. And I started selling covered calls down here in the low 60s. But looking in the last month, it's up 16.6% on the month, and at one point was even up 30% plus, reaching $80 plus a share. And it is finally starting to trickle up after its massive downturn from hitting that all-time high back in February of this year. Now, I'm a long-term investor in Chewy, and so long-term, I'm going to be holding the stock no matter what, and I really want to be careful because I don't want to have these shares called away from me for my covered calls if possible. Now that said, if I am forced to sell my shares, if I am forced to sell them, it's way better for me to sell them at $95 than to sell them at $80. Because I own 200 shares of the company, and that's a $3,000 difference between those 200 shares at $15 each. Now looking at this, month over month, this is my net gain and losses month over month since starting and moving everything from my other brokerages into this Fidelity portfolio. For the month of August, we had negative $329. For the month of September, we booked $454. For the month of October, we booked $1,568. And so far, as of the time I'm filming this, it is November 11th. And for the first 11 days, even counting that $500 loss that we just had with Chewy, we still have $1,734 worth of book profits, totaling $3,427 in total. So going over to my Fidelity portfolio, I'm gonna highlight 2 positions real quick, and this will show how I'm relating this Chewy trade in relation to what I've been doing with the other positions in my portfolio. First off, we have a 400 share short at $14.57, so about $5,800. shorting Nikola Corporation. And the other trade I just made just last week was shorting 12 shares of Bill.com stock at an average price of $340. So that is a $4,000 short roughly. And between the two, we're looking at about $10,000 worth of short positions. I've just taken those in the last week, and that is coming from someone that has never taken a short position before. I'm going to try to hedge myself from this rapidly increasing market because I've had some incredible gains. All of the stocks that I've had pretty much have raced up in price, at least in the bulk of things, and I really want to hedge against this market. Now let's go ahead and take a look at the year charts for the major indexes. The Dow Jones, the DIA ETF, is up 21% on the year. It's up and up and up and away. Looking at the last 5 years, pretty much since March of 2020, it's a straight line up and to the right. Let's look at SPY, SPY ETF, the S&P 500, and the last year is up 30.23%. Once again, up and to the right, looking at the last 5 years. If you go back to March of 2020, from that point onward, it's been just a straight line up. Actually, it's kind of interesting. Look at that. That's dang near a double up. Or that might actually, no, that is a double up from where we were at in March of 2020. That's incredible in just less than a 2-year span. Looking at the QQQ, the Nasdaq ETF, this thing, same thing, 96.7% up in the past year. 5-year chart, same story, over a double up from that lows back in March, well over a double up. And then we have the Russell 2000 ETF, the IWM ETF. The last year up 38.03%, last 5 years, same story. You get the big picture. And the reason why I'm investing in Chewy is that I believe it has a long-term value. And I wanted to showcase this here real quick. In a previous video I had a couple weeks ago, I talked about how Corsair Gaming, in my opinion, is still undervalued, and I used Google Trends to determine that. Obviously, it was more than just Google Trends. This was just one thing that I used to support my thesis for investing in the company, and I'm doing the same thing with Chewy. So go ahead and take a look at the last 5 years right here on Google Trends. Now, I want to showcase the time of year that it is around October, November, December, the last quarter of the year. And it goes back to November of 16. And so during the end of the year of 2016, the search results were about low mid-20s, about 20, 22, 24. So remember about, let's just say 22 average. The next year in 2017, towards the end of the year, it finished out, let's see, around a 35, higher than last year's 22. And from 35 at the end of next year, it finished out around, let's see, right around a 50-ish, roughly 50, higher than last year's 45. And then going the next year from 50, it goes up to about mid-60s, about 65. And then we had the pandemic, so that definitely skewed numbers. So we'll kind of skip that, but that one was obviously higher. And then so far, trending up already. Where we're at today in the middle of November, and December is when this normally peaks out more than not. But looking in December when this normally peaks out, we're not even there yet. And so far, you can see the gradual trend up. Right now, we're at a 72. And if we change these search results to a custom time range, and we only look at the last 3 years, you can kind of zoom in and get a bigger picture for this. You can see how the bottom trend from my mouse, the troughs, the lows are kind of at around 40, and then it keeps on going up, and then it's around low 50s, then it keeps on going higher. Now we're around 60s, and then 70s, and now we're finishing out much higher, and you can see the gradual uptrend over time. And based off of these results in the last 3 years, we're at an 80, which is at one of the peak times, and this has not been factored in yet into Chewy's earnings. Now I think this is really important to get an idea for the web traffic of how often people are searching Chewy's website and potentially signing up for their subscription. Now looking at my portfolio and all the positions, we have Chewy, Corsair Gaming, Tattooed Chef, we are short Nikola Corporation, we own CleanSpark, and then we are also short Bill.com. Now I have covered calls on all of my positions, and you'll notice on most of these, with the exception of a few that are very long term. One of them, for example, Corsair Gaming, we still have, what is that? That's about 10 months left on that contract, so that's no worries whatsoever. Chewy, after rolling out those contracts, we still have 5 months left on that contract. And the cool part between both of these by themselves, if you look right here, that is going to net us well over $2,000 if we wait and let those contracts expire. That's $2,300 just to wait between now and the next 10 months for those two contracts, and I'll probably be selling more than just that. And so overall, guys, if you notice and look at my portfolio, I'm really taking a lot of hedges because I just showed you all 4 of those indexes, and they are sky high, straight up and to the right, just like I said. Now, will this continue? I'm not sure, but what I'm going to keep on doing is take as many hedges as possible and continue to get a fail-safe. You keep on taking some hedges against myself in case the market turns down. Because if the market gets scared, if people start selling out of stocks, they start selling out of the indexes, that doesn't just affect Chewy. That doesn't just affect Corsair Gaming or Tattooed Chef. That affects every single stock just about that's in the stock market. So whether I pick a good or bad investment, if the stocks temporarily go down, my covered calls will insulate some of those losses, and I will also have my short positions to take advantage of these big dips. But regardless, guys, either way, I'll keep you guys updated with every single move that I make, and this is just to give you some ideas for maybe you can do this with your portfolio or if you own Chewy shares yourself. But regardless, guys, I'm gonna give you an update on every single move that I make, both positive or negative. If you haven't checked it out already, like I mentioned, get signed up with that stuff down below in the description. Subscribe and like the video if you haven't already. But other than that, I thank you guys for watching, and I'll catch you guys next time.